Global markets are absolutely reeling as the price of oil surpasses $130 before retracing a bit this morning. That's also caused ripple effects throughout all markets. And of course, crypto is not immune. I have two very special guests today. Mike McGlone, senior commodity analyst at Bloomberg. He's the guy if you want to talk about commodities and what it means for global markets. And my friend who I've never had on before, I'm really excited, True Crypto, Mr. Anderson, one of my favorite traders and personalities on crypto, to talk about the Bitcoin chart, what all this could possibly mean, and to give us a view on how he handles his technical analysis and trading. Going to be a huge show today, as always. You don't want to miss it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel. Take your fist and just slam it down on the like button. Break your keyboard. Do whatever you need to do after seeing what markets have been doing this weekend. Because judging by the comments on my tweets over the last few days, seems like we've got fits of rage across all humans everywhere who are participating in these absolutely nonsensical markets. I hope that all of you had a great weekend, have been obviously able to detach. It would be nice, but there's a lot going on, and all of it seems to be affecting our portfolios tremendously on a day-to-day basis. So listen, I'm going to dive right into the news here quick and then start to bring on our amazing guests. So first, listen, this is just one story of many of the same tune, right? Mastercard, Visa suspend services in Russia, amid invasion of Ukraine. Guys, the Russian people, the Russian economy, of course, has been cut off largely from the world due to U.S. sanctions, but now it's obviously that this is having ripple effects and spreading across even retail and your average Russian, right? Mastercard, Visa suspending service, PayPal suspending service. Russia's basically turned off the internet. Right now, if you are the average Russian, you basically have no access to money and no ability to transact. Right? You can make your judgment on what that means for your average person in Russia, whether they deserve it or not. I obviously don't think that they deserve it as a citizen who's just trying to support their family and get by. But that's the nature of what is happening right now over in Russia. They're absolutely being cut off from the world, and it's hard to watch. And you can only hope that this conflict ends peacefully and is resolved rather quickly, so that we can get back to life and that these people will have options, because right now they really, really don't. Now, I want to show you two charts really quick. This they're just absurd. This is oil, light crude oil futures right now. Obviously, you can see hit $130. $130. There's an old saying from the automakers that that you're going to go into a recession if the price of oil doubles in a year. Well, it was about $65 exactly a year ago. It hit 130. So we're right there as far as that metric for a global recession. And this is wheat, which, by the way, you see these little ticks right here. Wheat seems to be limiting up and not even trading, but I can talk about that right now with our guest, Mike McGlone, right here. Mike, I'm going to take these charts. We'll take the chart off right here. Mike, how are you, man?
I'm good, Scott. I appreciate you showing those charts, and you nailed it. Wheat is limit up. There's no trading except you're doing synthetics, which means the options. And I look at it as a former trader, and a lot of people in that space. There's at least the producers are doing fine, but there's a lot of people getting hurt, and you will hear those stories of firms going under. And I mean, I've seen the personal impact of divorces and suicide and things like that. So I hope people go okay, but that's what markets are made of right now.
So talk about the relationship between what's happening with oil and the ripple effect that it's having, how that is related to wheat. You had a great I obviously get your newsletter all the time, or your analysis. I got it this morning and you covered it.
So let's start with crude oil, the most significant commodity on the planet. It just reached the highest level above its 60-month moving average as it did in 2008 at the peak, in 1990 when Saddam Hussein invaded Kuwait. I was in the trading pits then, initially got shut off offside, and then we made some good money with clients because we figured out how to do it. The point is, the market's that extreme, and it's priced for a supply shock, and I'll give you my view. I think it's going to be more likely, you mentioned earlier, demand destruction. First of all, not just from the price, from the psychology of the war, the Cold War coming back, and that's from someone who used to do duck and cover. and the Fed tightening. This is almost a perfect storm for the revision lower of risk assets. We'll get the crypto in there because cryptos are risk assets. They're just transitioning, and everything follows. When people talk about data and stuff, it doesn't matter. All that matters right now is the war and what's happening with this war and crude oil. So $130 this morning was 2.2x the 60-month moving average. The peak in 1990 was 2.1x. The peak in 2008 was 2.2x. And then each time they collapsed 80%. And certainly 2008 to me is the best example. Global recession to me is just like a perfect recipe. Now wheat, I mentioned, is part of that. Wheat's about food. But I'll end you with this. The big difference with wheat is we're probably not going to get that demand destruction. What I mean is, out of Russia, all that supply, it's not like Kuwait. We just took that supply off the market. It's going to go to China. They've made those agreements. Wheat is different. Russia and Ukraine together are the world's largest exporters of wheat. And it's not so much of the actual wheat, because that's going to be a boom for North American producers. I have a farm, or used to have a farm in the Corn Belt, but it's the fertilizer. Russia is one of the largest exporters of fertilizers. That's gone from the market, maybe for a long time. So it means reduced yields, and most notably, not first world countries, which means sustain higher food prices for a while.
Yeah, I mean, I read something sort of superficially about this having a disproportionate effect in the Middle East, on food
Egypt.
Shortages in the Middle East, food prices in the Middle East specifically.
Number one importer of wheat in the planet is Egypt, about 80% of their total usage. And the key thing to remember about wheat is the farmers say it's a weed. It can grow. It's the most significant crop that's grown everywhere on the planet. It doesn't matter the elevation. The major sources are U.S., Canada, France, obviously with Russia, Ukraine in the top. But the main importers, Middle East, big problems. Now they're going to get a lot more from the U.S. The U.S. has been cutting back acreage for years. In fact, we recently reached a 100-year low in acreage because there's more money in corn and soybeans. But that's what's going to happen for farmers. They're going to just find every piece of land they can and plant, as long as the government doesn't make it too complicated. It's going to be a boom for them. But yeah, there's parts of the world that are really going to be hurting, and that's why I think it's our duty, and I think all farmers get it, to help feed the world here. And but you can make money doing it too. It's going to happen anyhow. It's just I hope our government figures out and kind of helps with some of the. There's a lot of restrictions for planting and things.
So is the resolution to all this completely dependent on how fast this war ends? I mean, and I guess even more importantly, if we then lift the restrictions on Russia, right? Because
so Russia, giving you my views, Russia will spiral into a complete economic collapse. I think that's a very high probability. You mentioned it earlier. It's completely politically correct to cut them off, and I think they miscalculated the beginning of this is World War III potentially. Hopefully, it doesn't get nuclear, but the economic war of the future. This is the first 21st century economic war. We can crush them completely economically. The ruble is going to completely collapse. It already started. There's no hope for it. There's no hope, because we will make sure, the whole world will make sure Russia will feel the pain. And so the problem is we have to feel that pain too. So Russia's about 10% of the global economy. Everybody's going to feel the pain too. That's your recession in addition to the tapes. But the analogy I heard this week and that I found quite true and scary is that we have the equivalent in Mr. Putin of a suicide bomber with nuclear weapons. The person, this is not a sane person. He does not care. He's actually seems to be quite happy with instilling fear in the world, and he can use that nuclear option to his advantage, knowing that we can't go nuclear because he can just have the kill pill, which we're all afraid of, and he's threatened it already without being provoked. Claims he is, but that's how scary it is as far as escalations dropping in Ukraine. This is one thing that we picked up on early is this is a done deal. The Ukraine will be taken over by Russia. It's a question of where it stops and when it stops. And then there's the NATO states, there's Poland, and there's things like that. So I don't think it's going to get better. It might calm down for a while, but the bottom line is it looks like we're pretty close to peaking in crude oil. I don't think it gets much higher if history's a guide. And then there's that issue I mentioned, all that Russian supply, the market's price for leaving the market is going to go to China. They've already made that agreement. So it's not like when Kuwait came off the market, we lost 7% of world supply and then got it back on after the war. This is different. It's just a transition.
Yeah, I mean, when you look at that chart, as you said, it kind of likely topping. I mean, it's interesting. It's not circling in the same place on my screen.
Well, a chart like that
It
can go
looks
up.
toppy.
Well,
Yeah,
it can go up a
infinite.
lot. I'm
Yeah.
just pointing out the point. The point is what's happened in the past. It's its own enemy because just since 2008, crude oil's collapsed 80% 3 times. When it goes up too much, it creates its own destruction and goes down. And the bottom line is the cost of production. In the U.S., the cost to produce 1 barrel of crude oil is less than $40 a barrel.
Okay, so obviously the next question is all other assets, Bitcoin, crypto. I mean, listen, you've been on here multiple times before there was even a threat of war saying this recession was coming anyways. Right.
Yeah,
it didn't even need the war.
Well, that's the problem. Is we got you look at markets sometimes technically and fundamentally, you just wait for a spark. This is the most significant spark for recession I've ever seen. I'm only 57. I have to admit that I've been in the trading pits in the 80s. I've never seen anything this severe. Fed's tightening. Stock market's already corrected 10%, 15%, and the Fed is still priced. The market's still priced for 25 basis points hiked in the next year. When this happened in 2018, when the market already dropped 15% or so, what was hiked for price for 4 basis points, 4 hikes, one already went down to 0 and price for easing. So it's price for easing. So it's lose for risk assets, which is where Bitcoin fits in that space. So I like to say it right now, when you see the stock market dropping 1, 2, 3%, Bitcoin will drop. But the bottom line, it's already showing divergent strength. So just look at Bitcoin on the year. I see Bitcoin's down, 15%. The Nasdaq's down 17%. That's significant because Bitcoin typically trades about 3 to 4 times the volatility of the Nasdaq. Bitcoin should be down about 3x the Nasdaq. It's the process of divergent strength. What I see it's doing, shifting from risk on to risk off, and might get to $30,000. But if it goes there, imagine where the stock market is. It can easily correct 30, 40% in the stock market. It's happened in history. And then
Sure.
I think Bitcoin comes out ahead. It takes a long time, and I still think just based on supply, demand, and adoption trends, it's just a matter of time it gets to 100,000. And this could be part of that base forming period.
What's interesting, obviously, is also the price action of gold right now, right? I mean, right before the war, we saw this sort of major pump. War hit, gold dumped immediately. So did silver. But now we're seeing some sustained rise, a real actual flight to safety. What is surprising to me is that through all the Fed money printing and everything, we didn't really see gold move when you would have expected it as an inflation hedge. But now in this real serious event where there's a flight to safety, we are actually seeing people buy gold. And Bitcoin is not really moving with gold necessarily.
It's still, Scott, I have to admit, it's still having tracked gold for decades and metals and commodities. It's very disappointing. Bitcoin, gold to me should be above 2,000. Should have crossed that $2,000.
3,000.
I mean, well, it should have crossed that. There's a Rubicon of resistance at $2,000. I think once it gets above there, it's never looking back. And that's just based on the fact there's an unlimited supply of fiat currency. We get that, and there's a limited supply of gold, and it's way overdue. Now, with a war like this, that's been the haven, and it's still performing relatively very poorly. And I'm not bearish gold, but I'm very disappointed. Like at some point, you have to say, hey, what's going on here? I think long bonds have a better potential to perform well this year because I think we're going to a deflationary recession at some point. I mean, you had the base effect. It's going to head lower once crude oil collapses, which might take a while. And gold should do better in that environment. But I view the bottom line for most money managers on the planet, particularly those who've been holding and hoarding gold forever, is they are at greater risk if they don't have some Bitcoin in that portfolio of gold. And that's a significant shock I see, even from Mr. Putin and from China, to put all their eggs in one basket with gold. I mean, Putin's really he really boosted his foreign currency reserves in gold. I don't think he bought Bitcoin. But who's going to accept gold from Russia anymore? I mean, they're the global pariah, and their economy is going to just absolutely collapse. But gold's part of that. They probably have to sell part of their gold to raise cash to support the war effort.
Well, what a misstep by them to have so much of their money offshore so easily cut off. I mean, hundreds of billions of dollars in Russian, you would have thought that he would have, I think he just didn't anticipate it, as you sort of said before. And I mean, Elizabeth Warren and her friends would probably tell you that Putin is Satoshi Nakamoto and has the entire world supply of Bitcoin right now, right? But I think you're right. When you look, we would have known if Russia was actively pursuing heavy, exposure to Bitcoin before this. They just weren't.
Well, that's the problem now. We have a caged animal who's clearly, I think, way underappreciated the global response and the response from Ukraine. My first thought when it came up was you might as well just lay down your arms and give up rather than die, because you're going to die. I mean, he's going to run over the country. The Russians have a history of that. It's what I grew up with, the Cold War. The Russians are coming. Well, now they're coming. And we've seen, obviously, Ukraine's won that the hearts and minds of the world. It's horrible what's happening. But what I see is the absolute collapse of the 10th largest economy on the planet. And until he's gone, the problem is there's a poison pill. If I fully expect, and this is the research I've done, he might have a poison pill. If something happens to him, the missiles fly. It's like lose-lose. It's just that dicey of a situation. And anybody who's younger than me, I've had so many of these conversations who said, oh, it's not a big deal. I'm like, please, this is as bad as I've ever seen it as far as the potential risks of global economy. This person, who's one person, is all that matters right now. The data you see from like inflation and PPI and employment doesn't matter. It's what's Mr. Putin doing in Ukraine and what do we believe he's going to be doing? Because anything he says, he doesn't, you can't believe what he says. You got to watch what he does.
It's so scary in context, though, because as you said, markets already were looking extremely shaky and ready to fall off a cliff with the Fed having no ammo left in their weapons at all before we even started talking about this. Really
so the rules don't fight the Fed, and let's not fight invading armies for Russia. So here's a major thing that I've never seen in history. The fact that Switzerland, a major crypto-friendly country, has pushed back and actually said, no, we're not neutral, we're against Russia. That's never happened in history that I know of. Now, of course, I'm sure there's listeners who know the history better than I do, but that was a shocking thing because I think they get it. We're a small country. The tanks can overrun us too. And who are we going to call to save us? Uncle Joe Biden? I mean, Putin navigated this so well, unfortunately, knew that once we pulled out of Afghanistan, there's no heart for my son, who's a captain in the army, to be in harm's way in Europe, who've been fighting each other forever.
Well, Mike, thank you so much for your perspective. Listen, we can't be all puppies and unicorns all the time, right? Sometimes we need a hard pill of reality, and that's it. Doesn't mean that everything is going to fall off a cliff. It just means that it could. And people need to be aware of that.
That's the key thing. There's a major mean reversion event happening in the stock market. It's way overdue for that. And I want to end on a real positive note. There's no better voice. I listen to tons of podcasts, and when I'm riding that bike in Miami against the wind in traffic, there's no better voice than yours. I can hear it versus some other people. I have to push the mic in, my headphone in so I can hear. So I appreciate your distinct voice. It's true.
It's that very good radio voice. Doesn't matter what I'm saying. It's just at least I'm loud, right? Well,
there you go.
Thank you, Mike. Much appreciated. And we'll see you in Miami soon, and probably back here before that. Thank you, guys. Yeah, it's not all puppies and unicorns, as I said. And Mike is the best in the business. He is the senior commodity analyst at Bloomberg. This is the voice that we want to be listening to. As he said, don't fade the Fed. Don't fade a land war in the Ukraine. It's like the Princess Bride, right? What's the never get involved in a land war in Asia, right? One of the famous quotes there. So listen, I'm going to dig in right now into my Bitcoin charts, and then I'm going to bring on, as I like to say, someone smarter than me to take a look at the charts and give us his view. That is Mr. Anderson, True Crypto. But here we go. First of all, I just want to touch on a few things. This weekly chart, I mean, this is as horrid as it really gets for price action, in my very, very personal opinion. Look at these wicks up and down, absolutely savage. We had this, what many would call a gravestone doji here, right? That move up to 55.5 and closing almost all the way down at the weekly open. The weekly open was about 37.8. It closed down about 38.4. But just people, I've seen a lot of people talking about what a terrible candle this is. What a terrible candle this is right here. By the way, I'm looking at my chart over here, and this is on that candle. And now I'm looking at StreamYard over here, and it's to the right of it. So it's this candle right here. I think it's hard for me to tell if it's getting the lag or if it's in the correct place. But last week's candle had that massive wick up. A gravestone doji generally is a really horrible candle when it's at the top. Right? Shows that bulls tried to press, were rejected by bears. Bears are stepping in. Price is likely to go down. Actually, a candle like that, when it's at the bottom, is considered potentially bullish. But right now, I would say it's dead ass sideways, and there's no way to really judge that candle at the moment. Looking at the daily chart, we had that one massive candle that dropped through 42, dropped through 40,300, which was that 50 MA, and dropped through 39,600. Three, what should have been strong supports, all dumped through at the same exact time on the same day. That was a savage candle. This price action, when you zoom into it, I mean, it's just horrible. It's just horrible. It's just really awful. Look at this. I mean, BART up, BART down, BART up, BART down. Huge candles breaking through every key level without much resistance in both directions. Very, very, very difficult to trade this at the moment. Of course, though, we have bullish divergence with oversold RSI in the 4-hour chart, which is why I'm still hanging around in my positions at the moment. But my charts aren't that important, guys. I'm going to bring on True Crypto 28 on Twitter, but I like to call him Mr. Anderson. You're not going to see his face. You're not going to see it. What's up, buddy? How are you?
Oh man, they don't want to see my face. Trust me, it's scary. Used to be a lot better looking.
I thought that about myself for a while, but it's part of at our age, in our 40s or whatever, you got to become comfortable with your looks. But no, as many people in this space, obviously, not show your face. How are you, man? I'm so excited to finally have you on. Just to tell everyone, there's a few people you follow, obviously, on Twitter, and every time they tweet, you think, wow, I want to retweet that, or wow, I really agree with that. And your views on markets, but B, your views on psychology and trading and emotion just resonate with me constantly.
I appreciate that. Well, being through going through the experience myself, I was a terrible trader. I always like anytime I come on a show like this, I want people to know that I was awful. I was awful for years. So that they understand that, hey, if you're going through that, then that's the person that I'll relate to best. So I try to make them understand that the things that are most important are those psychological parts about trading. That's going to be the key, because we can all learn some basic TA, but if you don't understand the psychological element of it, you're going to have some problems. So that's usually my goal.
Yeah, it's funny. There's that gaping hole between being a good analyst and being a good trader.
Massive. Right? Yeah, you see a lot of that. Unfortunately, somehow, and plus, unfortunately, on Twitter, for the most part, you have a lot of people that are very good in terms of large accounts, but you also have a lot of large accounts that are just, whether they're the meme crowd and people love that, then so be it, or we're going to the moon every time, and that's usually what's popular. It's unfortunate that what's not popular is the things that are really going to help traders.
Perfect. So listen, I'm going to bring up your charts and let you sort of take the wheel. Guys, my goal here is you've looked at my stupid charts that are the same over and over again. We really want to get some fresh perspectives here on how other people are looking at these same things.
Absolutely. I don't know how different my perspective will be in this environment, but for sure we'll take a look. I mean, for me, the biggest thing is this is a huge high time frame chop at this point, which just makes the situation a little bit more murky than it was even before. I'm all about directional bias above anything else typically, and I'll talk about that in a minute, but really I look at this going back to last January. A lot of people have this type of view. I like a 2-week chart in case people are wondering what this is on. You need less confirmations, you tend to have better ranges, you don't have as many fake outs, things of that nature. Institutions tend to like that, big money tends to like it as well.
Yeah, I like that.
So with that, go back into time, there was a crucial area without running through too much. We set a high, we know about that, we came back, we set a low. There was a little bit of a moving average squeeze. Now you can choose your poison on what you like. Some people like an 18, a 20, 21. It's usually about the same on a moving average. A 45, a 50, a 55. It's usually about the same. We went into a squeeze period, packed back into this battle zone, the normal 0.38 to 0.618 type area, and then ran it up the highs. And in this case, on the 2-week, like rejections, right? We see rejections, and then ultimately that's a flush out. But for normal people that are in a world of expect continuation, which is the most normal approach to any type of market, we've been going up on this particular chart forever, essentially. So you come back into a value area, and it would make sense to still have bull dreams, even though we're in this environment, for as long as we're back in this EMA squeeze type of situation, which we've held so far. You brought up an interesting point about this particular candle. Now, this is on a 2-week, but it looked the same on the 1 week.
Yep.
One thing that a lot of people haven't pointed out with that particular pattern is that it is a very bullish pattern, but to confirm the pattern, you have to close above that high, right? So if you close a week above the weekly high that we just put in, we're probably off to the races to a large degree. And if we close below it, then 65% continuation. It works very well as a bad candle as well. So that's the extra step that normally people don't understand to really learn things to a point to where you truly, you don't know anything. We still don't know. It's just about edge. So if you can kind of complete that element, it kind of helps a lot as well. But It was off subject there. What I would say on this particular chart of where we're at now, a little bit of a moving average squeeze, which is always a 50-50 type scenario anyway. We did hold this lower level, which was very key as well. If we want to get into some Wyckoff, you could say, look, we tried to set a high time pattern here where there was some certain bits of accumulation for sure. Excuse me, I was choking on myself there. And we held that area very well on a couple different candles, which was nice. Anything below that, I consider that dump susceptible. Doesn't mean we're going to lose the range, but you're in scary town at that point. So you don't want to drop below this 36,000 level on a weekly close or a 2-week close, because you're probably going to look at a very scary test of this 14-month range. And then if you lose that, all bets are over. We're going to redraw everything and start fresh from that point and kind of see where we're at. Maybe you get a one-time flush out that bounces back, but that opens the door to so many things. This is difficult enough when you're looking at it this time frame. So that's really where I'm looking at things from anything else, just to see where we're going to resolve this high time frame look. And then from there, believe it or not, what I actually like to do when things are choppy, I do like to find a low time frame in which I can find some confluence to put myself into a position to say, hey, I feel better about the directional bias, which I brought up earlier. I'm more about directional bias, than anything else. I mean, with directional bias, I just want to, for the majority of the time, trade with the trend, keep it very simple. And then if I am countering the trend, which I do as well, I just want to be aware of that to say, all right, well, if I get a rejection on up here, okay, maybe I start with, I have a Telegram channel. It's free. People can follow, but we went short in this range up here. The only reason I bring it up because that's a counter on this high time frame, but we were basically just chopping along lower high, lower high, lower high, all the way down to this level. Now we didn't know that we were going to end up in the 30s, but just by that natural approach of like, okay, well, we're going to set a target. If we make a higher high, then we'll come off of this. Until then, we're just following the immediate trend, which is to the downside. So believe it or not, in this kind of environment, I would go all the way down to something like a 15-minute on a day like today to find out, okay, am I going to get a simple break of structure? I need this to close above 39,400 change. If I do that, I'll look to long the next pullback. Until that, this is expect continuation, drop further unless we show something different. So I'm waiting for it to show me something different. And that's ultimately where I'm at until there's some clear levels, and those clear levels are either higher or significantly lower, which is why we're kind of in that wash at the moment.
Yeah, I love the very, very clear idea that you need confirmation by the subsequent candle. And honestly, I find that even on the weekly, when you get the confirmation on the next candle, things tend to reverse anyways. The weekly chart that I pulled up, you couldn't trade it based on candle structure.
The weeklies do that a lot, and I think a lot of that is just market structure because it's a natural. The market loves to chop anyway, so you'll end up seeing the weekly. It looks like a failure, but then really it's just coming back for that deep pullback. But pulling back to the 0.618 or 0.786 on the weekly looks like a massive downtrend. It's just perspective of time frame awareness, really, more than anything else.
Absolutely, I absolutely love the perspective. Which are your favorite EMAs and MAs?
I mean, for me, in all honesty, I don't think anyone should get into favorite or anything favorite. What I would say more than that, since you brought it up, I mean, this is a chart that I like to use for bottom formations for Bitcoin. I don't know if we're short on time, so I don't want to roll over on anything. No, but ultimately, I mean, I like to look at, I want all this bottom chart is just showing me the yellow is Bitcoin versus the total market in general. And I like to see that above this red line, which is the 200. While price also establishes itself over that level. Once it does, I need it to make a higher high, right? So in that basic situation that people will see what's going on here, I would have wanted this to come back to a moving average and then bounce and run. When it doesn't, then there's a problem, right? That's ultimately something that I would look at to understand. So we're in that situation where Bitcoin has been trying for the first time in God knows how long. This is another reason why I had no concerns over it bottoming between any of this time period. But ultimately, now we got here. Now it's making that effort. So there's an effort being made, but we're not seeing EMA traders step in. So a lot of people, what they'll do is they'll say, hey, let's look at the cross, and that should mean something. But really, the cross, in my opinion, is an activator that says, let me look towards that dynamic support or resistance to see if it's working at that point. So in a situation like this, I would need this to bounce off of one of my moving averages. I use usually something like a 20, a 45, and a 200. You can use whatever you want. The key is, you have to look in those areas to see, are people stepping up? Do I get a rejection on that dynamic resistance? And if so, you just take a trade, set a stop, 1 ATR below the local low there, and then create a situation to where you're expecting a higher high, sell some of those profits into the resistance, and usually you're going to do pretty well. But if we go back over time, I'll get rid of this particular chart to kind of show you guys what I'm talking about. When you get these crossovers such as this, one thing is to say, oh, I should short it. Okay, well, maybe it would work in that environment. But if we see the rejections of these areas, that's when you're getting paid off. You see it reject, reject, right? In that scenario, then that's, again, directional bias. And I'm getting some confirmation that there's people that are trading like I am. They're seeing something similar. I'm seeing not only a horizontal resistance, which would be more important than anything else, but it would also give me some confirmation that there's other people that are utilizing a similar type of strategy so that we can jump in, trap the losing trader, which is a big thing. You want to find out, hey, where's the losing trader going to go wrong? And then ultimately flood into the other direction. And that's how you get these big drop-offs.
Yeah, absolutely. Absolutely perfect. So it sounds like, to sum up, you came to the same ultimate conclusion as me, which is we got to get above, you said 39.4. I've been calling it 39.6 for ages, right? That would be sort of your first idea. But then really now that we've set in continuously those highs around 45.5, something like that, that's where you would feel like, okay, yeah, it's time to party.
100%. I would agree with that, what you just said there. And in reality, is your number is fine. It's just looking at different time frames. So if I was on an hourly, I'm probably looking at the same numbers you are. I was just talking about an intraday trade for today.
Yeah,
that would get me started. Yeah. So on the 15-minute, that 39.3 level is a level I would look at to say, all right, once we break that, I will probably buy the next pullback and see if it has legs.
Yeah, absolutely perfect. So listen, one of the best things I love when you say is when you talk about the fact you were terrible at trading for so long, because that's exactly my personal experience. What finally flicked the switch for you? I went broke so many times over so many decades on stupid errors. For me, it was just, I got so tired of losing money that I finally was able to detach my emotions and do it right. But what was the sort of trigger for you?
I can tell you two things. I mean, the first thing was that I thought I knew it, right? That was part of the issue. I wasn't willing to accept the fact that I was terrible, right? It's like an alcoholic. The first step is to say, I'm an alcoholic, right? I needed to announce to the world that I was terrible because I had a job trading and everything like that. So it was a deep cover in my mind that I was trying to act like a trader. You know, this is going back into early 2000. But what happened is a customer had came in, actually was a friend of the owner. And he came in, the guy was a jerk, and I'll keep the story short. But basically, he started to tell me that he was doing extremely well trading. He thought I was a great trader. He didn't know I was just a guy doing trading, right? But ultimately, I asked him, well, how did you go about doing it? And it was a rough market back then. And he explained his system, which was 2 simple moving averages. And the guy didn't know anything else about trading. And I could see from his little basic system that it was getting him into moving in trends. And I hadn't thought about it in that direction. I thought about trends and read books on trends, but that opened my eyes to starting to think about things like moving averages, but also to see it from a directional bias standpoint. But it was a long evolution even from then. But that was the moment when I realized, oh, wait a second, I'm doing things all wrong. I don't even remember what I was doing back then. I was probably doing a little bit of everything. That's why I tell people, find one thing, master it, where you could teach a college course on it. When you get to that point, add something else. So that's really the key, because you don't know what you don't know. So if you start going off in a couple different directions, it's problematic, and it may not show up for years where you realize, oh my goodness, I'm doing this all wrong. So that's something that I try to tell people. And it's really hard to be honest with yourself. You got to know thyself, right? That's the biggest key, to say, I know my strengths and I know my weaknesses.
A lot of that comes with age, I think, to be quite honest, and obviously swallowing your ego. But I mean, I've been through it. It's such a funny story. You know, I've been through every single indicator strategy you can basically find. And after all of it, I come back to like, oh, look, there's a little divergence.
Oh yeah.
Right? And
I mean, if you have,
I just do it over and over again. But
I think that's great, because if you have directional bias fairly right? If you have an understanding of that, and you understand timeframes a little bit, hey, a divergence might be all you need. That's probably going to get you the closest to an entry point that makes sense. And it also allows you, more importantly than anything else, to understand that we don't know anything. Let me announce to the world, me learning the trade doesn't mean I know what's going to happen. I absolutely don't. In fact, the fact that I know that I don't know is my strength, because that makes me plan and execute. So that's the key to everything here, is that I say, no, I don't know. I'm going to try this divergence point. And the good thing is, if that divergence ends up being right, it probably has a couple extra legs to it. And it's going to allow me to, one, buy the next dip. It's going to put me into a position to catch a trend. Sometimes that trend started at 40, ends up at 69. Thank God, right? I didn't know what was going to happen at the time. I just kept doing the same thing. And then from there, I'll buy hidden divergences. Very simple.
Absolutely perfect, man. Well, thank you. So listen, you are officially open invite. Welcome back any single time. If you have something to share, think about, hit me up and come on. Everyone, it's True Crypto 28 on Twitter, correct? I'm not kidding, guys. You don't hear me say this. Is like one of my top 5 people to follow on all of Twitter.
I appreciate you, brother. Thank you so much for that.
So guys, everybody go follow him. Also, I mean, you do mentorships and stuff. I'm wrong?
No, I
group,
used to do it. Yeah,
used
everything
to.
I do is free, so everyone knows there's nothing I do that charges anything. There was a time where I did that during the bear market, but I was glad.
I just remember people being like, "This guy taught me everything I know."
Yeah. I still talk to every one of those guys. They're still in a private group. I still hang out with them. They're, I'm willing to help them forever, but I'm not going to add anyone and probably never will again.
Perfect, man. Well, thank you very much for taking the time, and we will do this again very soon. See you on Twitter.
Thanks, brother. Have a good one.
All right, guys, we're going to keep moving on with the news. Hope you're enjoying the new format. It's awesome to me. I love this. I love it. I love this. Yeah. Anyways, CoinDesk, here we go. Whale holdings in Cardano's ADA token hit record high. What? Large investors have boosted their coin stash by more than 40% this year. I was a little surprised by that. Seemingly, there's still a lot of interest in Cardano at the moment. The total value locked in the Cardano network has increased by $50 million in a week, hitting a lifetime high of 160.79 million. Still not very high, to be quite frank. According to DeFi Llama, more than 70% of those funds are locked in decentralized exchange, the DEX Sunday swap. So still a lot of interest at the moment in ADA and whale wallets increasing. Taking a look at the chart, actually, I mean, I haven't looked at it until right now, but just like with Bitcoin or others, very clear to me. I'm not saying, listen, we are in the middle of a potential world war, as Mike McGlone said. There's a lot going on, and a bullish divergence ain't going to save us from global macro issues. But if you believe in just trading the chart, we do have potential, actually almost confirmed. We'll see on the daily bullish divergence there. I would say we want to get back above 92 cents, this key swing low right here, before you would consider it. Crypto exchange FTX announces push into Europe. So listen, this is really interesting because obviously in most places in Europe, people are able to trade on FTX. There's no issues. The United States is usually the one that we point to and say, I can't do anything here. Can't do anything in the United States. We hate fun. We hate love. We hate happiness. We hate everything here, apparently. Can't do anything fun here that you want to do. But that's why they have FTX US, which obviously is a offshoot of the main FTX. You can't trade the same things. You can't trade with the same leverage, different rules. Well, most places in Europe, you've been able to trade on FTX, but they're getting ahead of it and going regulator to regulator, country to country, and creating compliant exchanges that will be able to move on indefinitely into the future. So you got to love that they're getting ahead of this instead of being reactionary. No strike against Binance. I love what Binance has done, but Binance being out there and being first have had to sort of be reactionary, right? They've had to just react to everything that's happening. They get shut down here, deal with regulators. FTX way out in front of this, creating a specific exchange for Europe. Dozens of tokens tumble as prolific developer Andre Kronje calls it quits. Investors are running for the exit as a mercurial developer leaves DeFi development behind. You guys have probably seen this all over the place. I actually had Michael Kong, the head of Phantom, CEO of Phantom, on the podcast. We had a whole conversation. None of it was about this. Now I feel like I can't use the podcast because we didn't get an opportunity to even discuss this. Here you go. Anton Nels, his partner. Andre and I have decided that we are closing the chapter of contributing to the DeFi crypto space. There are around 25 apps and services that we are terminating on the 3rd of April, 2022. And brutal. So listen, it doesn't mean the apps are going offline. If you go down further in the Twitter thread, you'll see that they've offered replacements. They are decentralized, of course. And it's important to note that these guys, they're programmers, right? But they're not, as Phantom responded, and I have no dog in the fight. It's not like he's a key component. He was just building in the Phantom ecosystem, and it shouldn't necessarily affect them, but it did obviously dump the price. The lesson here to me, he's had sort of this love-hate relationship with the community. The guy has openly said, Andre, I'm not building this shit for speculators, right? That's not my intention. That's not what I want here. I'm building this to actually help people create a parallel financial system. And he came head to head very often with the crypto Twitter community. A lot of pushback, a lot of criticism, a lot of hate. And I think, I mean, I can't speak specifically for him, but I think it finally boiled over and he's had enough. And he's taking his ball and going home like Cartman. Screw you guys. I'm going home. Right? Right? Don't want to see it. And it's obviously affected the price of effectively everything in DeFi, right? This was the dump on that Phantom right here. Oh my God. So listen, I want you guys to tell me when I do this right here, do you see my cursor on the huge blue candle or do you see it floating way off in space to the right? You guys tell me, where do you see my cursor right now? I see it on this blue candle. Do you see it? Where do you see it? Come on, guys, answer me. Answer me already. Answer me.
Oh, no. We suck again.
Tell me. Nobody's answering me. I can't see an answer, so I can't tell if I'm actually showing you what you want on the chart. But this right here should be, yeah, it's to the right. All right, so I'm going to try to look at it on your screen. This candle right here. Oh my God, I'm literally like 10 candles to the left on my screen. Right, this candle right there. That was the dump yesterday on that news. Shockwaves throughout the entire ecosystem. But interestingly, I mean, if you take a look, see, look at that. Look, does that look like I'm pulling it from the right place? Holy crap, that's so weird. See, it's over there, but watch. Oh, I can still pull that. Cool. This candle right here, doing it for you guys. This candle right here is still looking like it could be a potential reversal right here into this major demand area of support, right? So if you believe that he's just one man, I do, and that DeFi will somehow recover without him, could be a good time. And right, here you go. Layer 2 cryptocurrencies take beating as market shed $76 billion. They talk about Phantom, Solana, Near, Cosmos. Guys, we're in a, like, these stories. Of course they took a beating. Literally, like, did you see oil? Did you see wheat? You see what's going on in markets, son? It's rugged out there, disgusting, horrible, terrible, and we're hanging in there, man. We're hanging in there. Give us a break. Give us a break, guys. But yes, of course, everything took a beating. Market shed 76 billion. But if the market goes up, they'll go up. If everything keeps going down, we're going to keep going down. Really complicated, right? Griffin Gaming Partners raises 750 million fund with eye on Web3. Eyes. Everyone's eyes are on Web3. They don't care. Nobody cares about this correction. People are still building. That's what you need to remember. Billions of dollars coming in on a nearly daily basis into the crypto space with a wanton disregard for price action or, I don't know, World War III. I mean, I guess if the nukes fly, fucked anyways. The planet goes away, but the Bitcoin network survives and keeps on. It's like the cockroach of finance. Griffin Gaming, though, here, the gaming-focused venture capital firm now has more than $1 billion in assets under management. Who doesn't have $1 billion under assets under management now? Remember that show? What was it called? Who Wants to Be a Millionaire? Remember that show? Literally nobody anymore. Yeah, Who Wants to Be a 10 millionaire? Maybe $1 million. Pff, I can't even buy wheat. $1 million. Not good for anything. Yeah. Who wants to be a millionaire? Well, with inflation, you want to be a billionaire. So everybody has $1 billion funds, asset under management. Congratulations. Have fun staying moderately wealthy, I guess, with that. But this is what they said, though. Web3 is one of our central theses from a macro perspective within games. It's our view that the enablement of digital asset ownership with games may be the single most important technological unlock in the history of games. And to that, I respond, no shit, Sherlock. And finally, I have a podcast in about 12 minutes I need to record with Dan Hannum from Zen Ledger. He's gonna break down all the depressing things that we have to think about when it comes to our crypto taxes, the topic everybody loves talking about. But we'll get there. We'll get there. CVS trademark filing hints at metaverse pharmacy plans. Pharmacy chain CVS is filing trademark for use in virtual worlds, including the launch of crypto collectibles, non-fungible tokens. Finally, guys, finally, your limp dick avatar is going to be able to go get Viagra in the metaverse. Oh, man, it's like Tamagotchi. Remember that in the 90s? You had that little thing. It was like, it's sad. Push the button. And you push a button and your Tamagotchi wasn't sad. Or be like, it's hungry. And you push a button and it would eat. Well, now I guess if your avatar for some reason is really stressed out, you can go fill his prescription from Xanax that you got from your metaverse doctor. You know, why do we need CVS in the metaverse? It's listen, I'm here for it. Walmart in the metaverse, Panera in the metaverse. These are real things we've seen. McDonald's, CVS. But like, what are they going to sell, man? They're selling. Yeah. I don't know. Just good to, but the really screwed up thing though, like mentally, maybe not screwed up, but like I really feel like we're going to get to that point with the metaverse and Second Life and you know, we've seen it with NFT projects, right? I am my penguin and my penguin is me. That like people are going to like have the same, like you could be anything you want in the metaverse and people are going to like project their own shitty personal issues from the real world onto their avatar in the metaverse. Right? It's going to be like, well, I'm sad, so he's sad. Let's go over to CVS and get some Xanax. Yeah. You know, really makes you think. Really makes you think. You can be anything you want in the metaverse. And I have a feeling that most people are still just, I don't know, going to be huge asshole trolls. But anyways, guys, we're doing it, man. We got like a whole new format here. Shit is rocking. Right? Mike McGlone, the legend. We had True Crypto. You guys should follow both of them on the Twitter machine. Fibbo Swanee, our favorite, everybody's favorite over here in the chat. He's coming on Friday, and we're going to see his face. He is going to show us his face. So you'll be able to put a face to a name. And finally, after all of this, we're going to see his Fibonacci strategy that is much, much hyped over here. Chuckle Shirt. Cool name. Didn't someone get raped in the metaverse? No, I think somebody got sexually harassed in the metaverse. Yeah, you're gonna you have to go to your meta doctor to get a meta prescription to get Xanax in the metaverse. I would imagine. So yeah, there he is. Look, he's here. See the spiral? Fibonacci spiral, guys. If you don't know that, yeah, it's gonna be great. Gonna see his face. You guys are gonna be so excited when it happens, guys. That's all I got for you. So I will be back every day this week during the week at 10 a.m. Eastern Standard Time. Do not miss it. I don't know what we got in store yet for tomorrow, but Thursdays, I do the free for all Thursdays is already lining up to be something. Got a few big exchange CEOs already lined up to come on and have a chat. And I'm excited to see where that's going, guys. That's all I've got for you today. What am I doing? I have to go prep for a podcast. I will see you guys soon.